Good evening, everybody. We're going to give everybody just 2 more minutes to hop on. Feel free to send out this link if there's anybody you know that will be trading this week and wants to get set up. Also, drop your locations in the chat. Let me know where you're tuning in from. And again, we will get started in 2 minutes. All right. Let's get this going, family. Let's just switch up some screens here real quick. Get myself in the charts and view. Get the chat up on screen, which should start pouring in now. What's going on, family? How's everybody doing? Let's see what we got. Who we got in the chat tonight? Gladys, good to see you. Michael Bowman got some interference coming through the sound. High-pitched squeak. Ooh, if that's still going on, let me know. We should not be having any issue with that right now, though we should be good. Abel in the chat, what's good, my brother from North Carolina. Broadway Girls, A. Williams, what's up? Michael from out in New York. Tommy, what's going on, brother? Tuning in from GA. Hopefully everything has been good with your move, man. Hopefully you're settled in out there, my guy. Good to see all of the Academy and Inner Circle people on here, by the way. What's going on? We got Brooklyn, New York. We're at a Broadway Girls house. What's going on? Tuning in from New Mexico. Johnny, what's going on, bro? Who else we got? We got Trinidad and Tobago. We got Abel in the chat. Kyle from Vermont, what's going on? Checking in from LA. We got Sean up in the chat. What's going on, bro? Good to see you on here as well. A lot of familiar names. Love it. No Squeaks audio is perfect. Glad to hear it. If there is any issues, guys, just let me know. I don't know what that would have been about. It might have been because I had the stream open on my phone. I am reading comments off my phone, so hopefully that doesn't stop. What we got from Philly? What's going on, Philly? Peace and love, brother O. We got Lewis in here. What's going on, Lewis? We got the boy Reap in the building. Got Tennessee. Earl, what's going on? All right, family. Good to see you all. Thank you guys all for hopping on tonight. We got a little bit of Sunday market outlook happening right now. What we're going to do is we're going to just go over everything we kind of expect for the week. I'm going to give just a little bit of a brief fundamental overview. I think we're pretty light on the week. So we're going to start there. And then we're going to go through what's my checklist. My checklist is pretty small, guys. I don't have too many things on it. If we take a look over here, this is pretty much sums up 90% of what I trade. So we'll take a look at things like US 30. We'll take a look at SPX, oil, some Nasdaq, gold, GBP, JPY, silver maybe. I haven't really been trading silver. We could take a look if it's a crowd favorite. And then GBP, USD, some cryptos. And if there's anything else you guys want to look at, we could take a look at that as well. But these are the things that I know like the back of my hand. This is the stuff I've been trading day in, day out for what's now 6-7 years. Yeah, 7 years, almost coming up on 8. So we're gonna rock with that. Let's see what else we got. Abel says to ask questions. Yeah, people have questions. That's great too. We're gonna jump into a little bit of the fundamentals, guys. Like I said, we're gonna look at what our week consists of. Let me just move this over here real quick. Because we always want to, I always want to start off my week with knowing what's going on, right? What's going to be on the docket for this upcoming week. And a big reason why we do this is fundamentals are actually like the #1 driving force in the market, whether people want to believe that or not. But more importantly than these news events is actually the rumors that surround them, right? This is the stuff that's upcoming this week. Let me just turn that music off because now we're getting an ad. Right, this is the stuff that's upcoming for the week. So if you don't think that big banks, institutions, major players, even speculators like you and I are looking at this stuff and trying to position themselves early, right, you might have the wrong idea, right? A lot of people kind of look at these fundamental news events and people try to trade them right off the bat as they drop. But us being on the little bit on the smarter side, we would like to be prepared for the market, right? We don't like to jump in as things are happening. We want to prepare ourselves for that week. So we're going to take a look at this. I'm actually going to filter this down because as you guys can see, there's tons of news events throughout the week. Only a select few of these will actually greatly influence the market. So I'm going to just put this on high impact. I'm not really going to worry about what we consider soft data this week. I don't need a CoinEx ad. I keep getting a CoinEx ad. That must be an ad there. Alright, so let's filter this again. We just want just the high impact. We'll hit apply. And then we have just the, what we call, right, the high impact, the important stuff this week. Again, it is a pretty light week. I did kind of peek into this before we hopped on the call. So we're not expecting too much, but we're going to start the week We have a Monday speech at a GBP. I don't really concern myself with these too much. Speeches typically I don't try to trade around them. They also typically happen on a what's considered a tentative time frame. So even though this says 12:15, right, it's going to actually take them 15, 20, 30, 40 minutes to, make their points, say what they want to say. So typically this whole hour will be filled with some volatility. Again, this is the middle of the day. It's for us, so this is also kind of a little bit out of session for them. So I'm not too concerned with this speech that we got coming up at a GBP on Monday. On Tuesday, we have some PMI numbers coming out for the pound as well, which is going to greatly affect any positions that we have on GJ or GU, which we will be taking a look at today. We have Powell speaking, which is going to be a nice market mover. For those that you guys don't know, Jerome Powell is going to obviously be the chairman of the Fed, speaking at 12:20. I don't think this will be anything different than what he's recently said. Is to speak. Yeah, as the head of the Fed, we have FOMC this week, so he'll come out. He'll say some stuff about what they're looking to do. We'll get more into kind of their expectations as we kind of go further in here. But big event as well. This will influence things like US 30, Nasdaq, any dollar related pair. Let's see what else we got for Tuesday. We got President Lagarde speaking out of the Euro for 2 o'clock Eastern Standard Time. Again, another big thing. They're going to be laying out usually potential outlooks for what their next rate decisions may be. Again, we know all of this through other data anyway, so we don't necessarily need to hear them say it, but we do want to pay attention to these speeches anyway in case they say anything new or different, even though that is pretty unlikely. Let's see what else we got. We got interest rate decisions out of NZD. They're forecasting a 50 basis point hike. So they're currently at 1.5%. They're looking to maybe go to 2%. So for those of you that are looking at NZD pairs, which is not something I necessarily trade, you're going to want to be aware of this going into that Tuesday trading. A hike on this will initially make the NZD more appealing to hold. If you guys are new to interest rates and fundamentals, the logic around interest rates, just to give you guys like a super basic understanding here, is that the higher your interest rate, the more appealing your currency begins to look, right? So the higher this number is, the more investors may look at going into NZD to earn on that interest rate. It also makes it more expensive to borrow money and so forth. So this does make the currency a little bit more appealing. Now, the thing with this is you have to compare this to whatever cross currency you're trading. So we'll get into a little bit of that when we look at like the yen, but there are currencies that have low interest rates or negative rates, which will strengthen the NZD against them. But anything that sits around this same interest rate, you may not want to trade. You might get some whipsaw movements as both of those are kind of competing and battling it out. But let's see what else we got. We got Wednesday. We got not really much here. Lagarde is speaking again, so that's great for Euro. We have crude oil inventories. This is every Wednesday. Again, we trade oil, so again, this data is important. But most importantly, this week we have the FOMC meeting minutes, which is basically just going to be a transcript of what they've kind of discussed 2 weeks prior. So what's today? May 22nd. So yeah, around May, what is this going to be? May 11th, right? We're going to get the full kind of meeting minutes and details around that. This is what a lot of the market is going to be looking forward to. People are going to be jumping into trades Sunday, Monday, Tuesday, preparing themselves for this event. So this is our major rumor for the week. This is kind of what we want to trade into. Let's see. What do we got? Oil back to 125 a barrel. We will take a look at that. That's actually an interesting level that you brought up. We have FOMC meeting minutes. Again, this is our big news event for the week. So I'm going to be looking at setups that revolve around this, right? Revolve around Wednesday activity, looking for potential trade setups that we can take, preferably before that. Just continuing through the week, we have Thursday. What else we got? We got GDP coming out for the US dollar. Another big thing as well Does anybody know, if right in the chat, right, if you know why this GDP is actually going to be significant this time around, right? Do anybody have an idea why this GDP is actually going to be very, very, very important here? Alex, what's going on, bro? It's good, Skag. How are you? Hope you made millions in this past crypto bull market. Um, yeah, not to throw my portfolio out there, but we did very well this last bull run. We're gearing up for the next one. We could discuss a little bit about that as well. I'm big into the crypto space, right? I don't just trade Forex. I also do a lot in the crypto space. So we will see. Anybody have any thoughts on GDP, right? Why is GDP important? Does anybody know? Because if it is negative, then we are officially in a recession. Yeah, you just hit the nail right on the head, right? So if GDP, guys, again comes out on a negative basis, we are officially going to be, right, textbook wise, in a recession. Now, it's my belief we've already been here, right? We've been feeling this, calling this. People like Abel has been saying the same thing. We've been very bullish dollar on the idea that we are moving into recession with inflation running as high as it is. So if this does come out again negative, which is basically 2 quarters in a row like that, then yeah, you have a textbook recession, right? So Tommy hit that right on its head. Correct me if I'm wrong, but this is our first release of numbers after quantitative tightening. No, I think the prior release would because this is Q1. I don't know, to be quite honest with you. That's an interesting. I'd have to look at the exact date for that, but I'm gonna go with no because it seems like the last release would have been the first one for that. But we'll look into that, Michael. We'll double check. 2 consecutive negative quarters, yeah, is a recession. So 2 consecutive. The fact that we came out last time at this 1.4%. All right, previously we came out negative 1.4%. Excuse me. They're forecasting again a negative 1.4%. So they're basically telling you here that we are here. We are in a textbook, what's now considered a textbook recession. This is something I believe the market is already anticipated, right? We'll talk a little bit about that right now with some of these news events, right? As we get set up for the week, the big question is this, right? Is the market already pricing this stuff in, right? We're playing the rumors, right? So we want to know not necessarily what's happening on this release, right? There's like a 90% chance this comes out negative, right? It's forecasted negative. There's no real data that suggests that it's gonna come out positive, and if it does come out positive, it's probably borderline like even, right? If it does come out like that, I don't think it will. I think it'll contract actually more than this negative 1.4%. But you have to ask yourself, right, what is the market expecting, right? So the market is expecting for us to enter this recession. So there's one of two things could happen here, right? Either this number comes out as expected, and then you have to ask yourself, is the market already pricing this in, or is it going to continue pricing this in? Or this is going to come out as what we call like a shock number, right? Meaning that it's drastically either higher or lower, in which case then the market will make some sort of swing based off those new emotions in the market, right? So we kind of are expecting, I'm personally expecting a shock number below this negative 1.4, right? Meaning this comes out at like -2, -2.5, something a little bit more drastic than the market's expecting. And I believe that's going to actually bring in some additional fear. Now, that additional fear that comes into the market isn't a bad thing, right? That can actually give us great opportunities. And we'll look at that on Nasdaq and a few other things. Let's see what else we have in the chat. Abel says, this is Gems. Always appreciate you, bro. I've been on the Abel YouTube. I thought you were live. No, not Abel's not live. Skaggs is the man when he speaks. You're right about that. Appreciate you, Steven. You always supporting, bro. You've been around for years as well. You've seen that come up. Gladys says, well, SPX hit 420, which is considered a bear territory. Yeah, so you bring up a good point too, right? When we look at things like that, right? When we look at let's just go to the SPX real quick, because Gladys does brings up a decent point here, right? Like she just said, right? We hit 420, right? So I mean, we're trading a little bit below that, unless you're looking at like 420 down here. Right, so there's two things, right? When we talk about GDP contracting 2 consecutive months in a row, we're talking about a textbook recession. Textbook recession and bear market, yes, they're connected, but they're not the same thing. When we talk about like official bear market, people are typically talking about how much it's moved percentage wise from the highs, right? So you can accomplish that before GDP contracts 2 consecutive quarters in a row, right? So you can enter a quote unquote bear market before you actually enter recession. But it is a good point. A lot of the indices have actually entered in that territory in which they're, again, textbook definition of a bear market, which I believe is like that 20-23% kind of area. Let's see. We over here learning from one of my mentors. Listen, able to kind sometime. Listen, we came up together, bro. I learn a lot from Abel. Abel learns a lot from me. It's an even exchange, but definitely appreciate you. Let's see. You want to give us a live forecast? We will discuss XAU. Yeah, 20% drop from the high is considered bear market, which is honestly pretty easy to achieve. A lot of people look at like a 20% as it's difficult to achieve, but if you actually go back, there are a lot of times where the market will drop 20%, close to 20%. I mean, look at what we have here, right? This is the whole COVID drop, right? This is, what is this, a 36% decline. So you would consider that, right, a bear market. But really, where did this bear market go? It really didn't continue. Again, this is also driven through high, impact global economic, global kind of news, right? A geopolitical event is the word I was looking for there, right? Basically, the entire world. So you're looking at 30% decline. Yeah, is it a textbook bear market? Yes, right? But we can see that there wasn't enough data, and then the Fed steps in, pumps the market. So those definitions, take them as what you will. There are times the market is going to fall 20%, but that's all you get, right? Just a drastic, heavy, reactionary sell-off from the market, which is what that is. All right, so let's jump into some of the technical stuff here, right? Let's take a look at US 30. So what I like to do at the beginning of every week personally is I like to just look at the new weekly candles. If you don't already do this and you're just looking at the dailies, I would, tell you that looking at the time frame when it is brand new is important, right? So anytime you open up a new anything, it's important to look at that candle if you're actively looking for trade setups and whatnot. So what I mean by this is it's May 22nd right now, right? When we enter into June, on June 1st, you better be looking at the monthly candles. This way you can be aware of what's happening on the macro scale, right? Like you look in here, we have 2 months back-to-back nasty drips, right? If you get a third month and it starts leaning off a little bit, you might be able to start looking at stuff. We can also look at certain levels that we're coming into, right, on a monthly time frame. And that doesn't mean we're going to play off this stuff, but it's that awareness that you want to have that stuff marked up on your lower time frame charts as well. Right, so let's start out on the weekly here for some of the indices. And I'll kind of give you guys my thoughts on this. So obviously, we've been trending to the downside, right? We have sell side structure with lower highs and lower lows consecutively, right, throughout the weeks. Taking a look at this, I'm going to just start looking for what I call areas of liquidity, point of interest candles. The way I trade is based in smart money concepts and Wyckoff logic if you're new. So if some of this stuff kind of goes over your head, I do have videos on the channel that kind of break that stuff down. You guys can also search the internet just off keywords that I'm saying. So if it does seem like I don't trade the same way you do, that's okay, bear with me. We all have our different outlooks. But if we just take a look at this, even from a basic understanding, right, we've cleared these lows. We're now forming a new low. These are your old highs, right? We're missing a potential, pullback. That doesn't necessarily mean we're immediately looking for one, but it does mean that pressure is to the downside, right? So we do have sell side structure here. What I'm going to look for is just areas to the left. Now, I trade, again, in liquidity, which if you don't know what liquidity is, it's where money typically sits, right? So it's where you can expect traders to begin making decisions, right? It's areas of decision making. This might be an area that somebody might put a stop loss. This might be an area somebody might put a sell stop, a buy limit, right? It's an area of interest that there's people on both sides of the market that are going to be looking at, right? That is, again, a basic understanding of liquidity. So if we just look to the left here, and we just look for areas that traders may be, looking to trade off of, we see, again, this area that we came down into, which is real nice. But more importantly, we're also kind of looking at this broader zone, right? So for me, the next pocket of money, the next pocket of liquidity is inside of here, right? Just on a weekly time frame. Doesn't mean I'm going to do anything with price down here. Doesn't necessarily mean I even think it's going to come down here this week. But I am just marking out weekly liquidity on the downside. Now on the upside, we don't really have anything that's clear cut and close enough for us to really look into. This area here, this area of support, we know that traders that maybe are in early week buys, maybe that were buying this low, maybe people that had buy limits down here. Some people probably had stop losses if they were long. I mean, if you were long for that many weeks on the US 30 and let it come back, that's besides the point. But, right, there's an area of liquidity down here. So we're going to just drop the time frame, continue looking for things like this. If we kind of take a look, just get some of this stuff off the chart here. Right, areas of liquidity remain the same. We have a little bit of a liquidity pocket between here, which is quite interesting. And then we also have what we call a potential like order block or a continuation block, more specifically up here. All that means is that this is an area of resistance, an area of supply, whatever the word that you attach to something that might bring price back to the downside from below. So we kind of take a look at that. And now that I kind of have like my daily and weekly like liquidities, I'm going to start breaking down like a lower time frame. And the way that we trade and the way that I trade is I have to always be trading in an area of liquidity. So that's number one. I'm not executing unless it's in liquidity. I don't take stuff in the middle of a range. Unless I'm getting fresh pricing, recent fresh pricing, I'm not looking to trade. So when I take a look at US 30 here, I notice a few things that happened last week, right? Right now I'm going to focus on only what happened last week because that's going to give me a little bit of a picture for what the smarter money, the institutions, the banks might actually be doing. When I take a look at this, I see this wick last week, and there's a concept that we have that I teach in the academy and in the inner circle group. We talk about wicks like this, right? Most people, when they see a wick, what is the immediate assumption, right? What do you immediately assume when you guys see a structure point like this? Are you guys buying? Are you selling, right? When you see something like this, what are you typically doing? I cut off? No, I think we're good. If you're having sound issues, it might be on your side. But if you're having sound issues, you're not going to hear me either. But what do you guys typically do when you guys are looking at a wick like this? End of the trend. We good. Thank you. Thank you. Thank you. Thank you. End of the trend. So somebody said end of the trend. Let's see if there's anybody from the academy on, right? What do we believe about wicks, right? What do we believe about wicks? Buy, wait for it to fill. So yeah, so Lewis got it right. So we look for wicks to fill, right? When you see a wick like this, especially when it's the first sign of rejection, right? Because let's be real, right? Price has been moving down. Very nice this entire time. Now you get this wick, and a lot of people from this point are going to look again for those end of the trends. They're gonna look for buys. And I'm gonna just give you guys the benefit of the doubt real quick. Okay, yes, this thing moved over 1,000 points from the low. So yes, you could trade that way. But we know that the long-term trade is probably not going to work off of this, right? This is an area that is going to get sought and destroyed. It's literally going to get filled, right? These wicks, we expect them to get filled. We expect them to get tested. A lot of people look at this as a market structure point. There's some smart money traders that might be trading inside of OBs in here. But a lot of people would look at this as an immediate trend reversal, a way to kind of get into the buy side. And you can see for some days it did trade to the buy side, right? Those people did, assuming they closed out of their trades, could have pulled profit right there from that. All right, I'm not disagreeing with that, but what I do disagree with is that it's the end of a trend, right? That it's the immediate reversal. A lot of people look at this and their idea turns into something like this, where they're gonna just, buy maybe the market structure breakout. They're gonna put their stop loss there, and they think it's just gonna go all the way up, right? That's the belief, right? That's what most people see. But these candles alone by themselves without any sort of drawn out cycle don't really mean much, right? So this actually ended up getting taken later in the week. Now, of course, before it did that, what did it do? It came up and grabbed some other liquidity, right? Came up, found enough supply to bring itself lower, and it did so very quickly, right? The amount of time that it took to go up versus the amount of time that it took to come down is drastically different. Wait for it to fill, looking for a buy entry, exhausted, they always get filled. I wouldn't say they don't always get filled. That logic will also hurt you, but I will say more times than not they get filled. Not every wick gets filled. Somebody will find an example of one and be like, oh well, you said they always fill, and they don't always fill. It could be later in the cycle, and that wick you wouldn't expect to fill. This early in the cycle, yeah, there's an 80-90% chance this is always going to get retested. But there are accumulation schematics and certain upward rising channels that can accumulate enough orders without filling this. It has happened. It's happened on gold in the past. But a lot of people said, again, looking for a buy entry after this. And how long does that buy entry really last you? It doesn't. The second you get up into supply, the second you come up and take more liquidity, price spills over, and these people kind of get liquidated. Same thing kind of here. We had a nice push below that, and we're just capturing liquidity. Now, on US 30, I'm going to be real with you guys. I am bullish, right? I am building a case for this to begin to squeeze the late sellers, right? I do believe that this will see a rise up. But I'm making the claims for why this didn't happen last week, because we're looking into what we're looking into now, and these actually look really prime. I mean, if you guys were a part of the inner circle, all my academy students, right? You guys on Friday's call, you know what I said about these, right? These look primed to go. And that's because they've captured most of this liquidity. Now, what I want to do real quick is I actually want to get off US 30, because US 30 to me doesn't meet all the criteria for the way that I trade. This is actually a pretty sloppy range in comparison to the Nasdaq. But since they trade so close together, they will end up trending together. Same thing with SPX. This looks a little bit more like Nasdaq. This also looks like Nasdaq. If we switch over to Nasdaq, this is very similar. Let me just get caught up with the chat. Oh, we got Kyle Prasad in the house. Oh, Kyle hustles as he is now on YouTube. Shout out to Kyle. What up, my dude? All right, but if we take a look at the Nasdaq real quick, let me just delete some of the stuff we went over on Friday, which, by the way, we will also be now live on YouTube on Fridays doing end-of-week recaps about what happened in that specific week, kind of like we're doing right now, right? If we take a look at US 30, right, what do we have here, guys? Do you guys know what this is? My smart money traders, my Wyckoff traders, right? What do we call this? What do we call this little bit of structure here? And some people might argue that it's not perfect, but the market's not perfect, so. Same with gaps. Mostly they get filled, but some gaps can take a while to get filled. There was a gap on UJ that was, it just like recently filled. Well, not recently, but in comparison to how long I've been trading and how long I've seen that gap open, it was open for like 8 years or something like that. So they don't all. Now, Lewis, you're getting a little bit ahead. Not the spring, right? What do we call this structure here? Let me highlight it for you guys, right? What do we call this for my smart money concept traders, my Wyckoff traders, right? What do we see here? PS and buying climb. I mean, you're not wrong, Michael. You're not wrong. Actually, what you're looking at here is a PS buying climax. But we're going to keep it a little bit easier for people right here. Right, we see equal lows, right? Who said equal lows? Johnny Robinson. Johnny, what's good, bro? Yeah, these are equal lows, right? Or a double bottom, right? Some retail traders know this as a double bottom, right? Market comes down, right? Creates one level of a bottom, comes up, does its thing, comes down, creates a second bottom. Smart money concept, Wyckoff traders will call this equal lows, right? If you know about the equal low concept, what we have here, again, is a basic chart pattern, right? Go onto Google, go onto YouTube here, and just search double bottom pattern, right? They're going to tell you that when you see this pattern, right, or this W formation, right, this almost W formation, right, they're going to tell you the retail way to trade this is to go long at some point after the double bottom, right? Maybe even grab the double bottom. And they're usually putting their stop losses down here, and they're usually looking to, again, trade this as the W, right, as that double bottom pattern, and target higher, right? But as us with smart money concepts of supply and demand traders, we know that the market hunts this kind of liquidity, right? So that's exactly what happened, right? We have the retail community stepping in, right? They bring price a little higher. They all get excited. Some of them maybe add on to their positions. Some of them maybe go break even. But they build up liquidity down here until the market comes down and takes that, which is precisely what we saw, which was like late session New York on Friday, right? So all of these traders now just got taken out of their positions. Now, they may be looking at this on the daily, and this, again, this looks like a good zone to buy. On the weekly time frame, you're coming into, right, nice areas of, potential support, right? And all these traders, it's not that they're wrong, right? It's not that they're wrong. It's just that they're executing wrong. And full disclaimer, right, because I know my inner circle people will rip me to shreds. I was and I will always buy in these areas on lower time frames, right? There are lower time frame cycles in here that we played. A lot of you guys that are in the inner circle, you guys know that, right? We took long positions on these. But this, if you go back and you look at the previous Sunday calls, right, we talked about how this cycle will develop itself eventually and give us what we call a liquidity grab, a spring. Some of you guys wrote spring in here. Some of you guys follow the AMD method, the accumulation, manipulation, distribution. I hate that method. I hate that explanation of things. But for my AMD traders, yeah, you can say there was an accumulation, this is your manipulation, and then now it's going to distribute out as in continue. I hate that saying. I think it's a cheap and easy. I think it's a shortcut. It's a shortcut. It doesn't really explain everything. You're not fully grasping the logic. You're not really following the supply and demand. And there's a lot of cases where that is not the case, right? That it's better in hindsight than it is in actually executing. This live session will be saved. Yeah, this will be on the YouTube channel. Stops you out then flies after. Yeah, which is exactly what it is, right? Look at this big scary candle. Right? Look at this big scary candle. Right? Look how aggressive this is. This is 4 hours of very aggressive selling. Right? This is the middle of the day. This is 9 a.m. in the morning, right? On a Friday. So you're talking from 9 a.m. in the morning Eastern Standard Time, right? From 9 to 10, 11 to 12, and then you get that new candle at what, 1 o'clock? And you get that new candle at are we on? I'm on a 4 hour, right? Yeah, new candle at 1 o'clock. It's 1300. Right? It's a very aggressive candle, right? You would look at this, and a lot of people would say, "Oh man, the support broke. It's a crazy bearish candle." Some people might even be looking at this and be looking for reasons to go short, right? Some people say, "Oh, it broke the support level on strength. Maybe let's just try to continue selling it into the Friday close." But now look at how quick we erase this move. Right? Look at how quick we erase this move. And these moves, you have to understand, happened at times of the day where they tell you not to trade, where most people say not to trade. Most people say don't trade into the Friday close. Most people tell you don't trade the Sunday open. But I'm willing to bet that the Friday close and the Sunday open on Nasdaq is some of the best pricing that you guys are going to see all week long. Right? I'm telling you, my bias, because of how many people just got taken out of this market on a Friday, and the way that it's reacting now, and some of my students and Wyckoff traders, like you guys know the lower time frame stuff that we'll look at. There's actually a few other things happening here that we believe, for the reason that we believe that. But I'm willing to bet that this low holds on Nasdaq, US 30, and SPX. And if that's going to be my bias for the week, I need to start looking at lower time frames to get in on this so I can ride that. And what my setup's going to look like on these, more or less, right, will be hopefully somewhere lower. Again, we haven't done any analysis breaking down the lower time frame yet, but my trades would very simply look something like this. I'd probably target, I'm looking at like 13,500. I'll probably look a little bit higher. All right, and that will be like my overall bias for this week. Now, I want to give you guys one reason why I'm really trading to the buy side after a move like this, and that is volume, right? I want to just bring to your attention the volume indicator, right? If you look at my charts, they're very clean. I use market structure and I use volume. That's all I use. I use Wyckoff footprints, which is exactly what we have in here. We're not going to delve into the Wyckoff logic too much. I want to keep this as base level smart money concepts as I can for this stream. But if we just add volume here, volume is a very interesting indicator. It's not like the MACD and the RSI. The MACD and the RSI, they're a little bit laggy in the way they act, right? They're lagging indicators. Moving averages are lagging indicators. A lot of these will be dependent on the close. Now, they take data in from the open and they will move around as a candle moves, but a lot of them are lagging, right? They don't really matter until the candle closes. Volume is kind of like that, but it's more up to date. It's as up to date as actual price action, right? Because every time price moves, the volume profile is going to update as well, and it's not going to drastically tick up and down like you're going to see on RSI or MACD, right? That, when you're looking at MACD live, it's either pointing up or straight down, depending on how like the current candle is printing, right? It's greatly affected by that, where this is just giving you data of the size of orders coming in and how much money is being exchanged, right? So volume, if you're not aware, and I'll put out a whole video on volume is literally measuring the effort behind a move, right? How strong the intentions of that move are. And what I'm going to do for you guys is I'm going to just highlight really quick, right? I'm going to drop this vertical line here. Hopefully you guys can see that well. And if you look at this candle, right, the big scary bearish candle that stopped all these people out that were in early and probably induced some selling into the market, right, exchanging what we call dumb money into smart money hands, right? This is where all the, again, it's no offense if you were taking trades down here. Dumb money is just how we refer to the wrong traders in the market, right? Sometimes we are the dumb money. Sometimes we take trades and we're not on the right side of the market, right? So we call it dumb money the people that are doing the wrong thing, and the smart money are the people with the true intentions, right? There's 1,000 words for this. Some people say market maker. Some people say the operator. Wyckoff had his term for it, right? I use smart and dumb money, right? So this is an exchange of that dumb money into smart money hand ownership. And a great way to know if a candle like this is a serious breakout is to look at the volume associated with it, right? Now, if you look at this, you're probably saying like, okay, that looks like it's a pretty good amount of volume. But what I want to open your eyes to is comparative volume analysis, right? You want to look at the effort that sellers were putting in every other time they came to this level. Now, this is going to be a bad example because the sell volume here is drastically off a cliff, right? Which is unfortunate for this example. But if you kind of take a look at other times that price drastically was moving down, like over here and over here, if we see, right, this volume is not increasing, right? Which means there's not a concentrated effort to bring it lower, right? So we just draw a little trend line across this, we can actually see that this selling volume, I should say, is some of the lowest selling volume in the entire price range, right? Since price has been sitting down here and sitting in a range, because let's be real, that's what this is a broad range, it is trading at some of the least amount of effort that it's seen in weeks, right? So what happens here is when you see this, there's a few things that you can do. You can start to play lower time frame structure. You can break this down and start to see if there's any buying action happening on a 5 or a 15-minute time frame. Or you can wait to see if price comes back into the range, and if it does so on, any sort of similar or increased effort, right? We're going to take that to the buy side, because down here we know that all of the big money interest was absorbing the dumb money and bringing the market back to its true direction after taking them out, right? They all got liquidated. Most people got liquidated. Anybody that exchanged down here to the sell side, they were just doing the market operators a favor, giving them their last final discounts and then bringing it up. We do call this a spring in Wyckoff terms. I'm just going to break this down on a 15-minute, show you guys kind of what this looks like. Actually, we're going to use the 5-minute time frame here. All right, so let's just take a look at this. Right, so we have the entire down move, right? Look at the entire down move. Entire down move is happening. What's happening to the sell volume? It's decreasing, right? At the same time, as that's happening, right, what is the buying volume doing down here? Right? What is the buying volume doing down here? Stochastic looks up to date as I've never used stochastic. I've never used stochastic. Right? You guys see the buying, the buying volume is increasing, right? You see the little increase here? This is institutions beginning to step in on a serious level and begin to absorb and accumulate that supply. Right? This is them showing their effort. They can't hide their intentions, right? They can manipulate the market. They can do whatever they want. There's a lot of people that buy into that concept of they sell to buy, they buy to sell. I have my own logic in my head about that I'm not going to break down right now. But what's happening is they are stepping in on greater interest, right? Let's draw out the trend line. Look at the buy volume beginning to tick up. I wish I could hide that little thing that keeps popping up. I wish I knew how to hide this. Is there a way to hide that? Yeah, it's so annoying. Right, but if you look down there, you can see again, as it's moving down, the sell volume is decreasing, the buy volume is upticking. This is what we call price to volume divergence. Now, with that, you can begin to look to trade with those institutions, right? You can begin looking at this lower time frame structure, right? You could say, okay, well, we start to see that the market is breaking some structure, right? We have a 5-minute break of structure here, which, again, you guys may not consider that serious, but when you're looking inside of these liquidity zones, these little shifts in market structure actually become really, really important, right? So we get that little bit of a market structure shift. You play back into it. For my smart money, I'm going to get a little bit advanced with some people that maybe don't know about smart money concepts. But if we take a look down here, look at the structure that we begin to form here. Right, this is what we consider real order block structure. And I say real order block structure because there is a lot of fake order block structure that gets created out there. Right, there's a lot of engulfing candles, really nice setups that actually don't play out because they're not in the right locations. They don't have the right effort behind them. It's not the right time in the market. But this is all aligning. And what we see here is we see a nice order block formation. Right, beautiful order block formation in 4-hour liquidity. So all of this is happening down in this 4-hour liquidity, and we already know that the effort is low, right? So we're putting pieces of the pie together here, right? Comes down, retests into the order block perfectly, right? Price comes back down into this zone, and we talked about this on Friday with some of the students, and this was, you couldn't ask for a better setup on the Nasdaq. You could not, in terms of risk to reward, you could not ask for anything better out of this. So based off of everything we see down here, we would have, again, I'm not in this position, unfortunately. I wish I was. I was not active on the charts at this time, right? We highly suspect that this is what we consider protected price action. right? We are assuming that this is going to be not only the low on this 15-minute, but the low on this 4-hour, and potentially even the low on this daily, right? Because now we're already starting to see some daily order blocks maybe forming with today's daily candle. Again, it's 4 hours into the session though, so a lot of that can change. But this is looking like a really pristine prime setup on all time frames. So that's why we're looking for some bullishness out of this market, right? And we're going to look, again, I'm looking at like 13,500, right? We're just going to play to the next important daily zone. We will have to do some managements around 1223 if we do get into the trade, but I'm ultimately looking for us to capture, you know, at least this liquidity. I would love to even go higher, but we have to manage as it kind of goes on. Best teaching of the volume indicator that I've ever heard. Yeah, so I mean, volume is my bread and butter. There's not a single trade I don't take without volume. I've studied volume for what's now 4.5, 5 years. A lot of traders sleep on it. It's such a basic indicator. I'll be real with you, it's super basic, but if you're gonna trade without anything, if you're gonna be one of those naked chart traders, those one of the pure technical traders, some people really like that. They don't use any indicators at all. I was like that as well until I learned that the effort behind the move is the most important aspect of anything, right? You can just use that volume that I showed you. You could use that with any break and retest strategy out there, and you can probably create a profitable plan. I won't say that you will be profitable because, you know, human error, you can go in and mess everything up yourself, even though your plan is elite. All right, but yeah, so based off that, guys, I am looking for buys. That being said, we got to ask ourselves, right, we're not in this, right? None of you guys are in this trade, right? So how can we get a piece of this pie, right? Where can we look, right, for our own trading opportunities? And I said on Friday to the few people that had access to that call that the Sunday open was probably going to be one of those weeks where we open and that's the best price. Like, you got to buy it. Like, that thing opens at 6:05, 6 o'clock on your broker. Like, you push buy at that time and like you're in that market. I hope that's not the case. My personal plan, the way I'm gonna handle this now, is I'm gonna have to just do one of two things. So depending what the market gives us during my execution times, right? I don't trade. I mean, I do trade at this time, but it's not. There's no clear setup right now, and it's also Sunday, right? So if I wasn't buying at the open, I'm probably not buying right now. So I'm going to look for a setup that makes sense for when I'm trading tomorrow morning, which is going to be between 5 a.m. and 11 a.m. Eastern, right? So we're going to look for one of two things. We're either going to look for a pullback before we break the structure, which I think is the least likely scenario, right? The least likely scenario is that we actually hold below this structure and we kind of fade off. In which case, I'm going to be looking at some 5 or 15-minute demand areas, specifically kind of around here, actually a little bit lower into here. But if we wake up and price has already pushed above this, again, when that's kind of what I'm expecting. I'm expecting this to push higher before it actually does fade off, if it fades off at all. Then I'll begin to kind of look at some of the structure that we're kind of playing at now, looking back at that Sunday open structure. So if we just go to the daily real quick, I want to just mark where we opened on the daily. Right, that's right here. So this is the weekly open right here. Let's just 1 second. Oh, that line is way to the left. All right, that's the weekly. That's the Sunday open, right? So let's just add some text on this. This is our Sunday open price. Sunday open. Right, so if we do push up, I'm looking to get back in a little bit below the open price. If we don't, I'm looking at what we call a wipe of the little reaccumulation. So for my white golf traders, you guys would look at this as a accumulation down here, markup, reaccumulation, markup, reaccumulation, markup, right? That's our kind of cycle. And with that in mind, we would be looking below this area because this is an area where demand kind of came in previously, right? We reaccumulated, they recollected orders here and brought it higher. We can expect demand to come in at this price level. But the thing about playing the wipe of a little range like this is we typically like to look just under it, right? We typically like to look just under it inside of this liquidity pocket, right? There's some traders that are probably in around this area. There are some traders that, let's just clean this up real quick, right? There are some traders that probably bought this breakout. Again, that's the Sunday open. That would have been me, right? Buying that Sunday open. And with that, they're probably placing their stop losses and their liquidity down inside this range. So we would be looking kind of right below that and the Sunday open. The fact that the Sunday open and that range are kind of in the same spot is quite beautiful to me, to be honest with you. So I'll be looking at something like a pullback to the 11,800 area. For stop losses on this, because there is a bunch of quote-unquote potential inefficiency in here, a lot of this actually looks like it was quickly mitigated on like lower time frames, but I would be looking at that setup. Now, I could run risk on this two different ways. I could run what we call a high-risk setup, meaning that I'm looking to get into this market around 11,800, and I'm looking to run my stop loss based off of structure when it forms here. Or we can run what we call like the low risk setup, because we know that we have protected price action and we don't expect it to go under 11, basically 11,475 here. You can run that wider stop and then target that same kind of multi-day move. Because remember, we are looking to take this multi-day back up into the 1300, and this is still a 1 to 4 setup, right? This is still a positive risk to reward setup, still looking at above 1 to 3, which is my personal criteria minimum for a trade. The thing with this is, though, most people, right? Maybe I'm wrong, right? Maybe there's some people in here, but with my experience, right, most traders, and I know the way people are, people like to over leverage, people like to overexpose themselves, people like to get emotional and add on as they're in and drawdown. Most people are probably not going to try to run a trade with a stop loss like that. If you're trading on a funded account, if you know what that is, with a prop firm, this is a little bit more of like a realistic kind of stop loss that you can run. But I know most traders are probably not going to be running into that. But if you are managing your money correctly, this would be the safest way to take the trade. Personally, though, even I'm not taking that because I'm trying to tighten up my risk to reward ratio. So let's see here. Let's see if there's anything in the chats. What's the indicator name? This is just volume. There's literally nothing fancy about it. You just come in here and you just do a volume right there. There are some other really great volume indicators. That's all stuff for a different day, different video though. Right, so that's my bias on indices. We are very bullish this week on these based off of the 4-hour liquidity grabs, the 15-minute order blocks within here. You guys can see the Sunday open is already, these institutions, people pre-trading the market are looking to get into this. So yeah, this looks like really prime. Again, I'm looking at 11,800. That's my preferred entry for the week. If I get a push up here, I'll be looking to play some other intraday liquidity probably. I probably have to sit out until Tuesday and maybe even play it on some of that news that we have later in the week if we get any kind of spikes down. So that's going to be the same thing for SPX, right? SPX, if you guys trade SPX, we'll be looking at the same kind of levels, right? Within this area, right below this little kind of mini 5-minute, 1-minute range. So in SPX, we are looking at the 38.95 is a little bit of a better area. But again, it's going to be all about how price comes down here and what it forms, right? We want to make sure that we're executing based off some sort of logic. We're not going to just take some random buy or sell limit. That is not the way that I trade. I trade in a live market environment, meaning that if it's not happening within my execution window and if it's not happening live in front of my face, I am not interested in taking that trade. There are setups that you can take with limit orders that do wonders. If that's in your trading plan, great. It's not in mine, but we are looking at the 38.95 area. US 30, if you guys just want those same numbers, again, you're looking at this area here at about 31,200. Again, protected price action, you're looking down here. I know some of my smart money traders, right, my white golf traders are looking at this potential order block area here. I'll be real with you guys, I just don't think we get it. It is an area of interest. I know people are looking at it. There's a few of my students that are looking at that as well, really looking for the pullback. I will say that US 30 has this area of inefficiency, so maybe it does pull back a little closer to that candle than I'm currently expecting. But I'm personally trading Nasdaq, and again, we'll monitor it as it comes down here. But we're not missing these buys. I'll tell you that. Let's see what we got. This SOS for real. Yeah, it might be a little advanced for some people, but that's okay. They're gonna learn. We'll be here every Sunday, kind of showing them. So let's take a look at gold, guys. Gold's been very interesting. Gold is actually another one that I'm very bullish on. So again, we want to start on the weekly time frame here, and we want to kind of just dissect. I'm sorry, I'm not going to delete a lot of my other analysis. I'll kind of break that down for you guys. But if we just take a look at the recent move on gold, we had a nice little bit of a retracement week after some strong moves down. We did do this into demand areas. You guys can kind of see I already have my weekly kind of liquidity area marked out, right? My expected new cycle zone. This is somewhere that we typically expect price to kind of navigate to. You know, we have the same kind of zones up here on a smaller time frame that I can show you guys. We haven't quite hit it yet. This is still an area of interest for me in the long term. It doesn't mean I'm necessarily going to be looking for that this week. I want to dissect what happened last week, right? So not much to really break down on this weekly chart. Not really much to break down. So let's drop down to the daily. When we drop down to the daily, it actually gets a little bit more interesting. You can see we're currently trading at 1852. Up into these old supply areas. Again, very big impulse candle that got erased. We're also looking at things like this. We have this nice wick to the downside. If we take a look at some of the volume and effort that's happening here, there really is no significant change. There's no volume to price action kind of divergence happening yet. The buying action, although is pretty high on this candle, doesn't really supersede anything previously, and the selling volume, although decreasing, again, is not outmatched by any sort of buying volume just yet. That being said, because of my current bias on the market and the dollar index in general, and some fundamental events that are currently headlining, like the whole monkeypox thing you may or may have not heard about. Hopefully you haven't heard about it yet. Hopefully I'm not instilling that fear into you. But with things like that still kind of happening and headlining, we're looking at gold to potentially take its safe haven status back. And there's a few other things that we were looking at cycle-wise. We are looking at this from a 4-hour perspective of maybe this is an accumulation down here. But again, if we kind of just take a look at this range, right? Let me clean up this chart real quick, get some of these arrows off of here. Some of these other intraday levels we don't need anymore, or that I will redraw for you. Let's get that out of here too. Those are old buy attempts that we tried, right? So let's just mark out the current range, right? Because we follow cycles, we look at ranges. We also trade range extremes. So yes, there is an area of support here. I do not mark out these areas. I don't really care for this area because this is the extreme low. Yes, we only have one tap to it. That is fine. I'm monitoring volume at these levels. I just at this point can't reference that with anything, right? So we do have price beginning to move up here. And the first question I'm always going to ask myself is the effort behind this move enough to break us out with conviction? And right now, again, we are early week, so understand this is Sunday action. But Friday and Sunday action, if we take a look at the volume here, the effort as we're moving up, it is declining. So it is possible that we actually see a little bit of a pullback in gold, right? It is possible that we see a little bit of a pullback in gold. So my immediate first thought on this is I'm going to wait until we get up to this 1858, 1860 area for two reasons. One, I want to see how we react price-wise, and two, I want to see how the volume is. Because right now, again, it is Sunday, so we take this volume with a grain of salt, right? There's not really going to be much activity on a Sunday in comparison to other days, unless, again, there's some sort of news event or, you know, something happening in the world over the weekend where you get an influx of volume. So it is possible maybe we get something like this week, where we get a little bit of structure to kind of come down and grab some of the liquidity below this wick. Because if you remember what we talked about at the beginning of this call, right? Yeah, these wicks will, you know, give you that reversal pattern. It will have people kind of buying up. And what this is going to kind of induce out of the market is it's going to induce people that are going to take some sort of break and retest trade. And it's just my belief that when that trade does play out, the buying effort's going to be lackluster, and the market's going to find reason to come back and liquidate all of these kind of late buyers inside of this range. Right? We see that there is actual buying interest near back at the lows, and we want to get back in that premium pricing. We don't be buying up here with a lot of the dumb money. So immediately on gold, I'm looking at this 1858, 1868 level. It is possible we break structure here. I would like to see that because that helps build us a case for a future kind of bullish move. So I would love us to see us push up out of here. I just don't want to see a large effort from the buyers. Then I want to see, you know, us come take this liquidity. Idealistically, we would also take this liquidity. So we would also maybe push back down into the zone, maybe fill out this wick, and then maybe we can take it back to the upside. Now, the problem with this is that the indices might drag this higher, right? They have the potential to drag it higher. If that happens, I'm going to adjust my analysis for the week. I'm not really going to build a case for that right now. But if I was going to take a trade off the sell side, if I was going to set that up for the week, what that would look like is a wipe of these highs here. Actually, let me go to the highlighter real quick. Right, a wipe of these highs here, creating a new high, maybe even wiping out a lot of this structure, and maybe even filling this wick. So I mean, this is pushing like 1870. So I'll probably trade this liquidity pocket. Maybe we don't get this wick. Right, so I'm looking between this area for price to kind of move up into and create a sell structure for me to play off of. And what that would look like, again, for my Wyckoff traders, we would be looking for a push up. We'll get that nice little rejection off. You'll probably create a 1 hour, 2 hour, maybe even a 4 hour order block up here. And then we take that order block retest to the downside. That's what I'm looking at on gold. Again, my worry here is that the broader market correction kind of takes control, but gold really doesn't have any significant buying up here. Look, we had this buying, we didn't clear any highs, and then now we're continuing higher on less volume. I'm willing to bet we get a nice dollar pullback this week. So my setup, I'm going to set my personal alerts. I will set an alert on this at, I'm liking this 18. To be honest with you, I want to be alerted when it moves into the zone. So I do want 1861. I'm going to be looking at 1861 for the alert. Add alerts. And I'm going to just quickly set this so it goes to my Discord. Trading view alerts. Right, so gold liquidity grab. Look for potential sells based off lower effort. Right, so if gold does move up into this area, I will be alerted not only by TradingView, but by Discord. It'll send a Discord notification to the Inner Circle members, and we'll know what to look for, right? We'll look for that low volume kind of breakout, and then look to trade this to the downside with the idea that we come and take out this wick, and possibly even this liquidity. So for gold, I'm really looking for a good 500, no, not 500. How do y'all count pips on this? Yeah, about 500 pip move. About a good 500 pip move. Do you think that the dollar index affects indices? All right, so let me drop some truth on you guys. Do you guys, so how many people use the DXY, right? Put DXY in the chat if you actually use the DXY, because you might have noticed that I didn't actually care to look at the DXY at all, right? Who actually uses the DXY? Do we have DXY traders in here? I might hurt some feelings. Abel, yeah, Abel loves his DX. Well, Abel and I, I mean, listen, listen. You guys could do whatever you want to do. I'm gonna just give you my opinion. That's all it is. Obviously, I respect all your opinion. Look, see, you guys, look how many we got DXYs we got in the chat, right? So listen, I'm gonna be real with you. The DXY doesn't show you anything that any other chart doesn't already show you. Right? I don't need to go look at the DXY because it's going to be the inverse of this. I know that. I don't have to go look at that. It's not going to show you anything. If you can analyze the DXY, then you can analyze without it. You don't need it. And also the DXY, you got to understand this, is like 60% EU. It's like the euro is like 60% of that basket of currencies that's weighted against. Right now, I'm not trading currency pairs. I'm not trading EU or GU. So I don't care what the DXY is. You'll never see me look at the DXY. Now, does it affect indices? Does the DXY affect indices? No, because the DXY is just another pair. It's just another form of price action that you can look at. What you're asking is, does the dollar itself affect the indexes? And that answer is yes. Yes, it does. Right? So again, for you DXY traders, again, I know some people like to look at that and they build their bias off of that. That's great until it's not. Again, you're not going to find many moves that don't correlate with that because the way money flow in the market happens, right? When the dollar gets stronger, yes, things like gold are going to depreciate against that, right? Things like EU are going to depreciate against that. But you shouldn't need the DXY to do your analysis, right? If you can do analysis on that, you can do it on UJ and EU without it. That's why I don't use it. I think it's just one of those things. Like, I don't trade it, right? Do you ever take a trade on the DXY? Like, you ever go on MT4 and like open up the DXY and like take a trade? Some people do. If that's you, then yeah, analyze it. If that's not you, I would urge you to maybe not bother with it. That's just my opinion. Now, back to like, does the dollar affect indices and stocks? Nasdaq US 30. Yes, it does, right? So think about this, right? When you go and you sell your stock, what are you effectively doing, right? When you sell your stock, right? When you sell something in the market, you're typically buying something, right? So what's happening there, right? You're selling the stock and you're buying dollars, right? We're buying dollars. So you're selling your stock and you're buying dollars. So if the indices are moving down, yes, that will give the dollar room to run. And just like if there's fundamentals that are affecting the dollar, making it more appealing, like those interest rates we talked about, like right now you have the Fed, they're increasing rates, right? That makes the dollar more appealing to hold, makes stocks less appealing to hold. So do they affect each other? Yes, they absolutely affect each other. But the DXY very specifically, as like something on TradingView, does, in my opinion, nothing. So sorry again if I'm offending some traders there. Again, you guys can use whatever you want. That's just me. You're never gonna see me do a DXY analysis on here. Yeah, hope that kind of clears some of that up for you guys. Again, though, we're looking at gold in this liquidity pocket right here. All right, we have our alert set at 1861. If it gets a little ahead of itself, again, we're not going to immediately short here. We're going to watch lower time frame price action. We're going to look for price to volume divergence. We're going to look for those, what we call live order blocks, which is something that's taught in the academy. That's all going to be played within here, looking for that move back down to, I mean, man, I would really love to see 1800. I would really love to come play with inside this wick, to be quite honest with you guys. Yeah, no doubt whatsoever. So let's take a look. What do we have next on our list? We have GJ, which is at 159.90. So for GJ, guys, I'm actually in some buys. We are actually still holding buys from last week. Let me just kind of go to my lower time frame charts here for you guys. So I am holding buys. We're in from this 158.80 level. We've also booked partials up near 159, like 80, 159.90. We did that last week when it was over here before it kind of came back down. Now we're sitting kind of back to where we were and where we booked those partials. So I am bullish bias on this pair. There's a few things we were kind of looking at on this. For us, it's kind of a lot of it is just like lower time frame action. So on GJ here, what we had was we had this wick fill, we had this break of structure. It played up into this liquidity pockets, right? Created this structure here. And at this point, since we got this shift in market structure, I was actually looking for reasons to get into buys on a fundamental level. If we just zoom out on these real quick, right? We just zoom out on this. This is by all means bullish, right? We are trending bullish. Here's your most recent low. Here's your most recent high. And then very recently we have this, right? So we are in bullish action. If you look on the weekly, this thing has been bullish for some time. It just spent a lot of time reaccumulating, right? So there's a lot of things happening on the higher time frames on why we're looking to the buy side. And on this 4 hour, we were just starting to play some of the pullbacks, right? So we were kind of just playing off the idea that after we got this market structure break, we were just looking for a wipe of liquidity. And then at that point, we were kind of just playing lower time frame structure. Now, looking at this right now, I'm looking at like reasons why we should probably get out of our long trades, right? I probably don't want to be holding this long too much longer. I mean, we're partialed out, so like we're 75% out of this position to begin with. So if it does break me even, I'm not too concerned. But looking at this, we do again have equal low structure right here. We also have like areas of liquidity still here and still here that could possibly be taken as well. Daily chart, you know, we have a lot of sell side momentum from, I didn't grab the brush, from here. We can also see some exhaustion happening. Again, it's kind of early week, so we're looking at this right now. And again, I'm going to hold this position to see how markets react with the, you know, Monday open. But I am hoping that this kind of follows suit with gold. And this might actually be leading gold a little bit because this is actually already kind of trading up into some of these supply areas. I mean, we took last week's liquidity already. Is this week? Yeah, this is this week. So we took last week's liquidity up into the supply. I'm looking at, yeah, look at this candle we played off of. This is what we call a continuation order block. So there's just like a lot of selling structure up here. We took those highs already. We took those lows already. Don't need that arrow. We're in buys on that. All right, so when I take a look at this, all right, I see a few different things, right? I see the liquidity that's ready to be grabbed down here. I see a lot of liquidity already kind of grabbed above these highs. And looking at this candle here, this is, again, if you guys are familiar with order block logic, this isn't what I don't call this an order block. You can if you want to. We call it a continuation block. The reason why we specify it as a different word is because the way I teach order block, the location really matters. And this is not a reversal order block. So we either say it's a reversal order block or a continuation order block. This is not a reversal, so we specify that, right? So as this being a continuation order block, it acts as an area of supply, and you can see as price kind of cleared these highs here on what is, if we just highlight real quick, this and this, right, is on what is lower volume. Again, if you just use these volume to price action divergences when you're creating new highs into areas of supply and the volume isn't there, you kind of get these moves to the downside. I mean, this actually looked really good. It's kind of unfortunate we maybe see a trading opportunity in here tonight. But off this idea, I do expect GJ to continue making structure to the downside. I do expect this to come down, kind of hit us at break even. Again, I will hold because I'm already partialed out. I'm not emotionally attached to that position. I'm not concerned about this position. I also have a position from down here when we bought the equal lows. That's the one I'll probably close, because if we take this out, then this is probably insights as well. But we're probably looking at something like this on GJ, where it kind of follows gold back to the downside. Now, this is also a basic market correlation, and I may be forcing this because of what I see and want to see on gold, right? So that's also why I'm kind of holding my buys, is because if I am wrong on gold and gold doesn't give me what I want, then GJ will act accordingly, and I can continue getting paid on those positions. That's why we hold our positions. But I am looking for, again, continuations to the downside on this. I do think good buying opportunities will come into the market at deeper liquidity, but if I were you, I would probably sit on the sell side on this, at least until the early week. I would be looking at this 2-hour setup that we have here. So just to refine this, really easy for you guys, right? Let's get rid of all of this. Let's get rid of everything we don't need for the setup. So we take a look at this order block, right, which is an obvious area of interest because it's sitting right below equal lows, right? We got to go to the 1 hour for, good, the order block is still there, beautiful, right? So we already got this kind of push up into this liquidity, into this order continuation block. Looking for it to capture liquidity, come back up, it'll probably do another little recycle. And then when it comes down and grabs this liquidity, we're going to look for the same thing that we saw on the Nasdaq, right, where it comes down, creates an opportunity where that dumb money is going to begin to exchange that money out to the smart money, giving up their positions at what we call a premium or a discount into an important area of structure. I know that this area also looks like an area of interest too. Remember, we're not using limits, we're using raw price action, what actually happens in this zone. But if I were you, I would look at two things on GJ. I mean, you could take this either way you want to take it, right? Pending your plan. You could look to potentially sell to the downside, right? Off the idea that we're not going to clear some of this, and look to target this liquidity down here, right? Trading into where these stop losses, buy stops, and that liquid market is. You can trade into that. Or you can be patient, look for the buy setup later in the week if it does come down here. Look for that liquidity, look for the lower time frame order blocks, and then trade this back to the buy side. You could also do both. You could take it both ways. You know, it really just depends on the setup when you're trading. If I wake up tomorrow and we're still kind of sitting up here, or even if we kind of liquidate this candle a little bit more and we do push back up into this zone, I will entertain these sells the same way I would entertain gold. This, I think, is kind of leading the market right now. So again, we have some pound news. We do have those speeches that are coming up as well. They also have PMI data. That PMI data probably not going to come out the best as well. So a lot of the fundamentals kind of align with this trade, which is real nice as well. So that's what I'm looking at on GJ. Again, we're looking at this, potential 159, mostly 160 area for retests. And then we'll come back in. I'm just going to look at the 15-minute time frame real quick to see maybe if you guys... Let's see. Yeah, so again, look at some of this volume divergence, right? So look at the period where it's moving up into that zone, and look at the buying activity. And then look immediately after, right? Immediately after, again, you get the nice candle to the downside, but look at the confirmation you have from the sell side. So yeah, even though you're probably not entering at the high there, when this came up and retested, you could have literally just, you probably wouldn't have got that entry, to be quite honest with you. You probably would have made this move, came back up, mitigated that order block, and then maybe you could have taken it. You could still maybe later on in the session, maybe it still does retest, comes down, captures the liquidity below this wick, and then comes back up for another entry. Yeah, so there's a lot of interesting little setups you can take on GJ. But this is a beautiful setup happening out right in front of your faces. So yeah, that's the idea on GJ, guys. Even though I just deleted it off the chart, did not mean to do that. Let's see what else we got here. Yeah, this is gonna be the same as gold, so I'm not gonna concern myself with that. We'll do GU, and then I will take maybe 1 or 2 suggestions. If you guys have pairs you want me to look at that are not anything that we already went over, and preferably not like a dollar pair, because a lot of these dollar pairs are going to do the same thing. Again, if you guys do your analysis on your DXY that you guys love so much, you guys can come to conclusions on that. But if there are other pairs you want me to take a look at, I can look at them. So let's just look at this on the weekly real quick. All right, yeah, so GU also, again, looking like it, for the longer term, possibly wants to pull back a little bit. I'm probably not going to chase this move. We are looking at like a potential weekly kind of order block setup here. The thing with this is that any reaction off of this will probably be short-lived because we know this is the beginning of a cycle. There's no multi-week cycle here. So we're going to take this order block with a grain of salt. I am, however, going to just add an area of interest line at the open of this candle. This is the entry point for me on an order block. Eurocad. Okay, we can take a look at Eurocad. If I move this down to a daily, yeah, these things look like they really want to run. I'm telling you, this week really might have been the week where the Sunday open is the best. So, well, the first thing I'm looking at is this candle here. Look at this. Again, strong daily kind of candle to the downside. If we just, again, look at the effort behind this move, right? It's just clouded in bullish volume, right? Absolutely surrounded by lots more effort. That's why it completely kind of erased the upside as well. So we do see a lot of buying activity. Again, daily order blocks that are down here are areas of interest. I will mark kind of this out as well as we kind of just lower the time frame. Let me just drag this over so it's not too far. Go down to the 4 hour. All right, so we are at this point, right, kind of broke structure. Right, this is our market structure break. We call this a change of character, which is not a word you've heard me say quite yet, but it's just another fancy word for break a structure. We had this nice little pullback, and we are seemingly, again, continuing higher. This is telling the same story, though, right? As we kind of play above into this liquidity here, you can see that the buying effort is starting to dry up. We have this little reaccumulation down here, which still needs to kind of get wiped. Maybe there's a buying opportunity below that. Let's break this down to a 2 hour again. Maybe a 1 hour. Yeah, so we do see, again, declining buying activity. Now, I do want to bring to your attention, right, just because we see declining buying activity, that alone isn't enough reason for it to give us a pullback, right? At some point, you need to see sell volume begin to outpace the buying volume. That, and only at that time can you begin looking for sells, right? So don't just hear me say that the buying volume is becoming less and less, and the effort behind the moves are becoming weaker and weaker, right? It can absolutely become weaker and weaker as long as the sellers are also becoming weaker and weaker. It's a comparative type thing. So as long as the sellers consistently remain weaker, right, it will continue to kind of trend to the upside. That being said, though, I am looking at, again, things like these wicks to kind of fill. I am looking at, this demand area that hasn't touched yet. We have this order block here. There's some areas of inefficiency that were on the 2 hour. or was it the 4 hour? Yeah, on the 4 hour, there's some inefficiency here. So, but a lot of that again is mitigated on lower time frames. So me looking at this again, I'm gonna see how it responds Monday during the open. But this is gonna be another kind of classic watch what happens as we come into this market structure point. I'll be looking at buying probably off of probably below here in this pocket of money is where I'll be looking to scale into my GJ or GU for that rather I'm sorry, for buys. Yeah. So again, looking for that dollar pullback. A lot of these pairs are going to be the same, taking out these lows. Now you might get a reaction. I will tell you, you might get a reaction where you kind of come down and you play into this liquidity and you actually don't break below here. If that's the case, then you just got to adjust, right? You have to adjust to the new structure, and then we can kind of take it. But you'll know by the market footprint that's left here, again, by the volume, the structure that forms, if you're a smart money concept or a Wyckoff trader. If not, then what you guys are basically going to look for is whatever confirmations you guys have, whether that's like a break and retest, whether that's like a moving average cross, right? Whatever buy signal after when you get a reaction from this area that you would normally take. But on GJ, I keep saying GJ. I really don't trade. I'm not trading currencies right now, to be honest with you guys. But I am expecting it in this area of one. I mean, this is asking a lot from the market though. Yeah, I'm looking at 123.63. I might be asking a lot because that's a pretty decent move. But with the PMI coming out for the pound of this week, that could be a good setup. Bullish divergence. What's the question about bullish divergence? What's your question about bullish divergence? For it to be divergence, you need signs from both sides, right? So you need it creating a new high on lower buying activity, and you also need a move to the downside with higher selling activity. So you need the divergence on both sides. You can't just have one. Like, yeah, it's making higher highs on lower volume, but until the sellers step in, again, that doesn't matter. All right, that's all I have. We have eurocad for St. Jude here. What's going on? Appreciate you hopping on. Let's see what we got. All right, so let's go out to the weekly real quick on this. Oh, we didn't go over oil. After this, I'll do oil. I forgot about oil. So eurocad. So eurocad is in a markdown phase or a downtrend, as some of you retail traders might call it. There's really no weekly activity going on here. It's been kind of range bound, so that'll be interesting. We'll just mark out the extremes of this range real quick, even though we'll see them on the daily. Let's come down to the daily real quick. Again, we want to do volume analysis at the extremes, right? So let's just mark out the extremes real quick for everybody. And then we have the volume, and volume. Right, so these are the volume kind of profiles that we're looking at. Again, you can see that sellers really tried to bring price lower in this area, and they could not do it. This is like our selling climax, right, for our Wyckoff traders. Right, this acts as our selling climax, or basically just a low of the range. This would be our ARST. And kind of just looking at this is what we call early signs of an early range, right? So when we look at this, there's not anything we're looking at on the daily. We don't really expect this daily chart to break anywhere, right? We would still want to see some sort of liquidity grab on either side of the market as a final kind of like spring-like or UT80-like action. So the way we deal with this is we know that at this point, the market is probably going to continue to play within this bounds, and it's probably going to be also become choppy, right? So it's probably going to play around in this a lot as it works out the supply and demand. So I'm not expecting this to do anything drastic, to be real with you. Let's see what else we got on the 4-hour, though. All right, so on the 4-hour, you do have some unmitigated OBs and some lows. Again, a lot of these markets look the same because, you know, just market conditions. A lot of them are flowing the same. A lot of them are flowing just very dollar heavy, asset off heavy, risk off heavy. So you get the same kind of structure. So looking at this again, we have an area of pent up liquidity, right, that has not yet been taken. Right, so this serves as an area of interest. Doesn't mean we're immediately going to come down here, though. We still need to build a case for that kind of coming down. If we look at some areas of supply, again, we see like potential continuation blocks. What we also see is areas of inefficiency or imbalance, for those that use that word, right? All the same meaning. And if you don't know what I mean by imbalance, we're just talking about untested price action, unmitigated price action where it's very smooth, right? One side of the market is in drastic control of the markets. So taking just a quick look at that, we might continue to trade up before we actually sweep these lows. Let's come into the 2-hour time frame. Yeah, so we have, again, some demand inside of here. But this is falling victim of the same thing, right, of declining volume throughout the market. Honestly, if I were you on eurocad, because I only trade, if I'm trading early in a cycle, right, early in a range like this, I'm only going to trade at the extremes of the range, right? So for my people that know Wyckoff logic, when we're in a phase B or even early phase A, when all we expect is it to range, there's only like a few ways you can like really play it. I only play it at the extremes, right? Because I want that best risk to reward possible. And because I know this is a choppy market, I know it'll play around here a lot. So I'm really only interested in playing eurocad underneath here. Unfortunately, this might go as high as 136.75 before that happens. I'm just not interested in trying to capitalize off of that move, at least on these time frames. If you were going to break this down to a 5-minute, 15-minute, you could trade in that direction. But again, because of what I expect out of the market, it's just going to be too choppy for my liking. Anything I do in the lower time frames, I'll probably take intraday profits on. So if I were you and I was looking at eurocad, especially from a 2-hour or 4-hour perspective, I would be waiting for a retest back below 134, 134.50, right? Just off the idea that we have to come back, test into some of this order block, maybe even play off of here. I would warn you, however, though, that this structure probably breaks and you're probably going to create a new low a little bit below it. So just understand, if you are playing this, I would look to buy just under this, or when price comes down and you get that kind of volume divergence down here, right, you'll wait for it to push back up into the range, right? So let's just say the market came up like this, came back down, dipped under that little bit of a structure, came back up, you're taking the last little retest here, and then you're looking for at least a return back to the range, right? So that's how I would play eurocad, is I would be looking to, you know, again, play the range the best that I could, only at one of the extremes. My setup would be, you know, something of the other of like that. Again, that's assuming that we get that. And then you can target something like that, which is a 1 to 9. This is probably going to test a lot of your patience, though. I'll be real with you. Just because you get the buy setup here, you targeting the top of the range, it's going to be a journey. It's not going to be like I drew this as a straight up arrow. That's not going to be the reality of what's going to happen. You might sit down here for a long time. You might come up and then end up like, it's because you're in a phase B environment. And if you don't know what a phase B environment is, it's when supply and demand really begins to work itself out. It's when the money begins to exchange kind of hands based off lower time frame structure. So again, you can look at a trade like that, but understand you might be holding that for a few days if you're looking for that. Now, you could also, because of the state of this market, right, where you are in that kind of like bearish flow, it might be safer to just, you know, target this area as an area of interest from the sell side, right? You could also look at this area of supply, because again, I do believe this will follow most of the other market in the way that it's going to make an up move first, up into deeper supply. So you could also play within this structure here. I would look to sell near the top of this. And then on this, I mean, the beautiful thing about eurocad is you could actually run a pretty decent pip stop loss and it won't be that far. But you probably want to just use previous structure here, or again, what I do, using actual in the moment market structure, and then target that liquidity for the same type of 1 to 6, 1 to 7 move. Let's see. Bitcoin, please. We could talk about Bitcoin and cryptos. Cryptos are my baby. I could be on here for like 3 hours talking about cryptos. Fire, appreciate you. If you guys are getting any sort of value and you guys are enjoying the stream, I would appreciate it if you guys could hit that like button. It does drastically help out the stream. Again, if you guys want to sub and you're getting value, I'm going to be on here every Sunday, possibly Wednesdays, and then Fridays. Wednesdays will probably be a live trading session, meaning we're going to come on here and actually execute together. Again, I'm not a financial advisor. You guys have to make your own decisions, but I will be executing in front of your face as long as the setups are there. And then Fridays we'll do recaps of the week as well. So we'll be live 3 times a week, and then I'll be dropping 2 or 3 videos a week as well. How can you join my academy? You can go to skag.academy and you can look at my supply and demand course, which goes over everything the way that we trade now, money management, trade management, following cycles. So there's no .com, it's literally just skag.academy. You can look at the course. You can look at the inner circle, which is where we do active day trading, right? Which we actually go live Tuesday through Thursday for New York session, and we trade together. I also give out a bunch of crypto alpha. We're always in there talking anything, right? That's for people, though, that are actively trading. Don't come in the inner circle trying to learn. If you're in the academy and a part of the inner circle, that's great. But we're in there executing, right? Our job in there is to actually take trades. We're not dealing in theory. We're actually looking at stuff to pull profit from. So if you're not actively trading and you're in a learning environment, that is not for you. Please don't sign up. So let's take a look at Bitcoin. My baby here. I love her. So, all right. So there's actually a lot to talk about here with Bitcoin. Some of you might be new to the way or my analysis on Bitcoin. This is my what I call my legacy chart, my long-term chart. This is where, like, once every 2 or 3 years, I will come on this chart and I will do analysis, right? Bitcoin for me is I'll be real with you guys. I've been in Bitcoin since 2016? Yeah, mid 2016, right? I bought my first Bitcoin at $525. I don't say that to flex. I just say that to give you a perspective of how long I've been following the structure, the cycles, right? I'm not somebody that jumped in at 40K and is telling you this stuff now. I've watched her do things year after year for multiple years. She's by far the most successful thing that I own in terms of my portfolio, with maybe the exception of other cryptos as well. But this is my legacy chart, right? Meaning I don't come in here, I don't make changes to this chart. I draw what I believe are the cycles for Bitcoin, and they either play out or they don't. Now, again, I have perfect documentation, right? So this is, again, way back in the day when we were trading it in 2017, 2018. This was the chart we kind of made up, right? That we just follow in the cycle, it was going to do its thing, and it was going to go off, and it perfectly did that. I swear to God, I've never moved this line ever in my life. That's literally how it played out. I don't move anything. So the same thing is happening here, right? So back in, what was this, October? Yeah, you can go back on my social medias. You guys can follow me on Instagram. I post this stuff all the time. I was heavy, pretty much since like August, right? It was like August, September-ish. I was telling people, listen, come November, October, November, December, you're going to want to get out if you are scared about holding for the long term, right? I was giving people the warnings of this decline, right? This is the cycle that I expect Bitcoin to take, right? I did expect it to fall from 60K, do its little, dancey dance all the way down to 26K, right? Fully expected this to happen. And now that this is kind of playing out, and this is honestly, I think, hold on one second, because I just realized this is not the same one that I share on Instagram. Is there a way to see object tree? Is there a brush hidden? There isn't. All right. I mean, technically, this is like the second idea that we had, but we're going to go with this one. All right. We were waiting for a very long time on this to grab this liquidity back here at 28K. And if you actually go back in my videos on my channel, you will see me calling the bullish run from here. I actually made a video when this happened, and I was like, yeah, we're going to run back to the highs. So again, I'm well versed in the cycles of Bitcoin. I got to be real with you guys, though. Looking at this is going to follow things like Nasdaq, US 30. These are all moving together, and they're all moving together for the same reason, right? The Fed is increasing rates, right? So you're getting that dollar, which is becoming more appealing. They're trying to combat inflation, right? And all of that fun stuff. So this is going to follow the same kind of roadmap that stocks are going to. Now, we grabbed this liquidity down here, and I'm going to do this more from like a margin trading perspective, but I want to give you guys the long-term outlook. Now that we've grabbed this liquidity, it's going to just be a giant game of a slow drip until we fill, again, some of the lows. I wish I had the other one that I had on Instagram. On Instagram, it's drawn like this. It's like literally the same roadmap, except it goes like this, and then it does its whole thing like that. All right, so we do expect this to get taken, and we're expecting it to kind of trade to the downside. That being said, there will still be pullback opportunities in Bitcoin to, margin trade or take. But if you are buying Bitcoin for the long term, first off, let me say it's never a bad idea. I don't care if you bought Bitcoin at 40K, 50K, 60K. I don't care if you bought the top. Right? If you're holding it for the long term and you truly mean that, and I mean that in like a 4-year, 5-year, 6-year, 8-year, 10-year type thing, then I don't care where you buy it. Eventually, trust me, as in my opinion, and based off the banger of a video I got for you guys later this week, you're going to be more than okay. But there's always a time where it is best to kind of buy it. And I don't believe that's it. So we're going to be looking at this, and I want you guys to keep in mind, I don't mean to come in here and like buy actual Bitcoin. I'm not talking about that. We're talking about margin trading, right, from here on out. But the cycle itself is still going to kind of play out to that downside. So kind of just taking a look at this, it's just kind of been stuck in this range. We actually talked about this on Friday as well. We are kind of seeing if it wants to kind of come back down into some of this liquidity. This is kind of what we were looking for originally when it first came down. You guys also know how I feel about the wick, so understand that anything we're looking on this is going to be short term because we do expect this wick to fill, right? But we need to hit an area of supply that has enough pent-up supply that will actually take us down here, right? Because if we haven't made our move yet, and this is off the fact that, Nasdaq and US 30 and everything else have already pushed lower, and this thing is still remaining strong, it's not likely that we take this quite yet. So, what I'm looking at on here, and what we kind of looked at on Friday, is if we kind of just assess how this acted, right, when it did make that move down on Friday. If we just look at kind of where it played into, right, it played into a very obvious area of demand, right? We didn't break any structure like US 30, Nasdaq, and all those other fun things did. If we break this down into a 2-hour, right, we can see we grabbed some like lower time frame liquidity. And if you just take a look at this is another volume concept that I'm going to give you guys, and this is probably the hardest volume concept to understand, right? And I want to talk about this. Let me just get rid of this arrow real quick, right? The volume that has to do with this move here, right? These volume profiles. Because if you take a look at this is selling, like we have never seen recently until, I mean, previously way over here, right? So we are trading at what's the highest volume in a while on a day where US 30, Nasdaq, and all of them pushed lower, right? So I'm gonna just ask the chat real quick, and maybe some of my academy students know this. Maybe hold off and like give them 10-15 seconds to answer, right? But when you guys see a high effort, right, to bring price lower, right, a high effort to bring price lower, and we don't break market structure, right? What do we call that from a Wyckoff and smart money concepts, right? What is the actual word for this price to volume action divergence? What's a dead cat bounce? A dead cat bounce is essentially just a low volume bounce. It's basically what we're looking for here. A dead cat bounce is when you break structure and the volume is just critically low. That's what a dead cat bounce. It just refers to a low volume pullback, typically after really high momentous selling. There's a gap on the 19K zones. I think do a dead cap. Okay, that's why you asked about dead cap bounce. I'm rejecting at approximately 37K. That's an interesting level. That's kind of where I'm looking, right? But does anybody know what this is called? Let's see if we have anybody in the chat, right, that knows what the high efforts selling action means with no market structure break, right? What's happening inside of here? Let's see if anybody knows. Let's see if any of the academy people know. Let's see. I'll give you all another 15 seconds. We'll see if anybody knows it. Liquidity sweep? No, a liquidity sweep. That's not a bad answer. A liquidity sweep would have been if it came down, right? So a liquidity sweep is when it actually trades into a liquid area of price, right? So if you were assuming there were a bunch of sell stops and buy limits and stop losses down here, yep, that would be a liquidity sweep. Not a bad guess though. What we call this is absorption, right? I'll write that down for you guys. We call this absorption. I can never spell absorption. Right, that might not even be right. It might be with a B. Whatever it is though, right? However you want to spell it. I spell it wrong every single time. Honestly, we put it on my chart like this because I'm not so great at spelling sometimes. Right, but we call this absorption, and what's happening here is, right, there's a bunch of interests that are selling a lot of an asset, right? They did put a lot of effort into here, but somebody is sitting there catching all of the orders, right? They're absorbing it, right? Just like a sponge absorbs water, right? If you put a sponge down and you dripped water on top of it, it sits in and it soaks in, right? This is the big money movers absorbing in the last little bit of supply. So when we see high effort like this and there's no market structure break, we know that there's a bigger interest stepping in and blocking that, right? It's almost you can almost say it's like an order block, and you can again look at some of the time frames here, like the 4-hour. You can maybe say that this is an order block. It doesn't have the structure of an order block, but you can say it definitely acted as one. So when we see this high selling volume here, and we just see no reaction in terms of breaking market structure, that lets us know right away that the buyers are in control of the market, right? The sellers tried their best to bring it lower. Somebody stepped in, absorbed all those orders, and then we continue higher. So we're actually bullish on Bitcoin, assuming that this level holds. Now there is liquidity buildup here, and we still do want to pay attention to this candle, right? But for the short term, I'm going to continuously trade to the buy side on this until we come up and take some of this extra liquidity. Now, it is because it didn't make a new low yet. Absolutely. It's an anomaly. I wouldn't even call it an anomaly, because an anomaly would mean that that it wasn't supposed to happen, right? That it's somehow like weird or abstract or different. That's not really the case here. What's happening is exactly what is meant to happen. Absorption is one of those things that happens late in a cycle, right? It's that last little bit of effort. It's actually what we might see on things like gold and whatnot this week. I wouldn't really call it an anomaly, unless you meant to spell absorption and it auto-corrected you, which in that case, that's just kind of funny. So we are looking at Bitcoin because of that absorption to come up, clear some of this liquidity up here, maybe even all of these wicks. I know somebody just said they were looking at 37K, right? Bitcoin mommy said she was looking at 37K. Long term, I'm in agreement with her. I'm really looking at that level as well. I'm just a little concerned about how we get to 37K. I do think the journey to 37K is a little bit more dragged out. I think we, capture some like lower liquidity here, and then we push above here. And once we kind of come up into this area near like 33, 34, that's kind of when I expect it to kind of harshly kind of fade back off, where we'll undergo either another period of absorption here, or we'll finally come back for this higher time frame order block. So I'm really only bullish up to like 33K before we get like a deeper pullback. But I am in agreement that after we get that, right, we kind of get this like what you call like a liquidation of both sides of the market, right, where you kind of come up and you sweep all the people that were in the sell side, right? They kind of all exit above this liquidity. Some people start committing to the buy side at this point, and then you kind of come down, wipe the bottom side of the range. So now you have the market liquidated up here, right? And you have the market liquidated down here. Then you can make the true move back to 37K, right? So if we just look at the daily, it would just kind of look like something like this. Again, back up into these supply candles. Like this is kind of what she's probably looking at, is some of this supply up here. If we go down to the 4-hour, right, a wipe of these old redistributions, right? So your expected zone, yeah, is up in this 37K, but I think the path to that is a little bit different, a little bit more unclear than us just going straight there. Gladys says, yeah, same here. I'm looking at 36K, which to me would be the ending form of the 4-hour wave before it comes down to fulfill the 5th wave. Yeah, so I mean, if you're doing some sort of Elliott wave theory, that could definitely play a part too. I'll be honest with you guys, I never studied Elliott wave theory. I never liked the wave counting logic. That's just me. Some people enjoy it. It's just one of those things that like never clicked in my head. It was always kind of confusing, so I never pursued it. What's the possible zone to go in for the buy? Say we missed. Okay, so say you're still looking to buy, like you want to get into a buy on this. Great question, right? So let's take a look at some of these lower time frame charts. So again, we have some wicks here that still need to fill, right? Still have some wicks here that still need to fill. I would probably look right below that. To be quite honest with you, I would probably want to trade into... Yeah, you have some inefficiency down there too. Let's see. So yeah, I would be probably looking at this just very obvious area to me. 29, 28. So looking at like an $800 dump maybe. Yeah, I would start to look at like 29,300. This 15-minute, again, it's probably going to reaccumulate, made its move. Now it's going to wipe the reaccumulation. Maybe right below this wick here. The thing with Bitcoin is Bitcoin can get very volatile very quick. So what like looks good on a 15-minute, you might want to see a little bit of a reaction, because there is like deeper liquidity levels it can grab. It can grab some of these other wicks here. I still think we overall hold these lows, which is why I would look at like 29.30. Oh, excuse me. Do I have water? Yeah, I do. 1 second, guys. Gotta stay hydrated, you know? All right. Yeah, I would look at this 29.30 area. It's possible maybe you don't even get that low. Maybe you just kind of fill this wick. Sometimes some early demand comes in, maybe inside of that 4-hour inefficiency. I don't trade inside of... I won't take an entry inside of this area. I know some people that trade imbalances like that. I don't do that. I lose every time I do that. So I know the type of trader I am. I won't succeed like that. So I'd be looking at like 29,300 if you were going to try to get in some buys on this. But again, what might happen this week with a lot of things is this might come up and capture this liquidity first, right? It might make this move up into these areas first, right? It doesn't... I'm not saying it's immediately going to come down from here. This is just like one of the pathways it could be taking. but we certainly could, you know, hold some structure inside of here, come up, capture some liquidity, again, into a candle like this, right, before we then kind of continue back off into that kind of like buying area. So just be mindful of that too. Don't like prematurely go short. Don't just jump into the shorts right away, because I mean, I wouldn't even jump into shorts at all, for that matter, to be quite honest with you. I wouldn't even be short side on this. But yeah. The Wyckoff accumulation schematic is every obvious here. Phase 1 completed, waiting for ST phase B, which would fill that way. Yeah. I mean, if you're looking at it on the 15 minute, I wouldn't look at this. So you're looking at this. You said I'm assuming you meant this 15-minute time frame, Peyton. So the Wyckoff accumulation schematic is ever so obvious here. Phase 1 completed, which I'm assuming you mean is phase A. Waiting for ST phase B. Yeah, so phase A. So you're looking at this as it's like, so first off, yeah, you'd be looking at this as like a reaccumulation, right? And this is, again, for my Wyckoff traders here. If you were looking at like the selling climax, I'm actually just going to use the brush. You guys know what we're looking at, like AR, and then you have an UT, ST. I mean, you can even maybe say this, I wouldn't say that's a selling climax though, because the volume is more appropriate here. Yeah, PSY is selling climax, AR, ST, all phase B, UT. Yeah. I mean, because we have this data, I guess we'll just say selling climax there. So yeah, PSY, selling climax, AR, ST. This is all phase B noise, but this is another smaller reaccumulation up into an up thrust. Probably get an ST phase B, sign of strength, and then we'll probably get another one final kind of pullback. It is possible, but again, this is more of a again on a smaller time frame though, which this could also be is PSY, selling climax, buying climax, ST, AR, and then a bunch of LPSYs. So you have cycles within cycles here. You can look at it a bunch of different ways depending on how far you want to drag out the cycle, right? Because you can say that this right here is a reaccumulation which led to this markup, and then a smaller time frame distribution. This is a smaller time frame reaccumulation inside of a reaccumulation. There's a lot of, you can sit here and you could break down a billion different cycles depending on the time frames you're looking at and how far you want to drag it out. But I definitely see what you're saying. We're definitely looking at this 29.3 area. Oh, accumulation 4 hour. Yeah, I was going to say, I was like, the 15 minute is like more a reaccum. Yeah, I mean, these kind of accumulations happen. You'll see these on like larger time frames. Again, I still think this is the long-term outlook. But yeah, on Bitcoin again, we're looking at something like this. Kind of come up into here, probably reaccumulate, come up, come down, and then it'll probably do its path. Low wick is the ST. Oh, okay. So you're saying buying climax AR. So you're saying buying climax here? Or I'm sorry, no, I'm selling climax here. I do that sometimes. I mislabel. And then you're saying ST. And then what are you looking for? ST phase B, back where I'm looking for here. Selling climax AR ST. My problem with that is like this isn't really selling climactic action. This is more selling climatic action, but that's just getting like way more advanced than we need to get for some people that are on this call. Again, though, if you guys are unfamiliar with cycles, it's all in past videos on here. Do I see Bitcoin coming down to 12K levels? Listen, I'm gonna be real with you guys. I'm gonna just be super honest. The only reason you're asking me that question is because you're probably considering buying Bitcoin to hold for the long term, right? Am I correct? Is that why you're asking? You're asking about like actual? Because what I'm gonna tell you right now is when people are trying to pinpoint lows like that, you're playing the wrong game. You could play that game on margin. When you're talking about multi-year investing, if you're going to tell me that you care about buying it at 12K or 14K or 18K or 20K, when you're looking at price projections of 100, 120K, 135K, if you're looking at like levels that I'm looking at, again, for the next bull run, I'm expecting Bitcoin to probably top out around somewhere around like 125K is like kind of where I'm looking at. Obviously, it could supersede my expectations. It has in the past. This cycle, what I said back in 2018 was 75K. We never even got to my expectation this time. So it is what it is. But next cycle, I'm expecting 125K. So if you're asking from the perception of like, should I buy all my Bitcoin in at 12K? I mean, that's probably a great price. Don't get me wrong. I would love to see it, but you're trying to get too accurate for the type of investment you're trying to make. So I personally don't see 12K. It could happen. It could absolutely happen. I wouldn't rule it out. I'm personally looking at like 18 though. I'm personally looking at 18,000. MicroStrategy is going to suffer a margin call at 21,000 if you're aware to that news. So I think, not that I think they'll get margin called, MicroStrategy will probably find a way to raise some more money. So that doesn't happen to them. But truth be told, it probably still hunts their liquidity level. Yeah, no, you're good, bro. I just again, like, there's some people on the call that just don't dive into that. Once I start dropping some gems on YouTube in video form, and we have the actual cycles drawn out, I can refer them back to that stuff. I mean, right now I can only delegate you back to the academy. All of that stuff is taught in the academy, as you know. I'm asking because I've seen some experts say that this weekend. All right, listen. You guys want some real alpha on Bitcoin? You want me to really show you how you never have to ask an expert ever again? Again, I'm going to drop a video on this. I have the entire video is made. It's like mostly edited. I'm going to drop it on you guys. If you guys want a sneak peek to that video, let's get some likes on here. Get this video to 10 likes, and I'll drop you guys. You never have to ask anybody again. I'll show you guys one last thing before we get off. I'll show you how you never have to ask me. You never have to ask anybody. I'll show you how I built towards a 7-figure crypto portfolio by just following one thing. One thing. I'm telling you, hit that like button. If it gets to 10 likes, I'll drop it on you. If not, you guys don't have to wait for the video to drop. It's just that simple. We'll see how bad people really want it. Because I think you guys are over complicating that way too much. Unless the video is already out. I don't even know what it's at. I don't even know if I can check. Let's see. It might already. I don't even know. Oh, we're at 40 likes. Okay, my phone says we're at 5. All right, so we have 40. All right. I don't know why my phone says we're at 5 likes. That's clearly wrong. All right, so listen. I got you guys right now. Y'all still with me? Y'all can still hear me good? Let's see. What is this, bro? Who's this Tinder person? I'm gonna remove that message. That seems like some scam stuff. All right, so let's get rid of the lo-fi here. All right. So how many people know what stock to flow is? Right? Type Bitcoin in the chat if you know what stock to flow is. Oh, it's looking to Bitcoin. Gareth Soloway said that. I have no idea who that is. Right? I'm going to introduce you guys to something real quick. I'm telling you, you'll never have to ask anybody ever again. Right? That's literally what my video was called. You'll never have to ask anybody ever again what to do for Bitcoin. Right? I'm going to introduce you to two concepts. I'm going to introduce you to the halving, and I'm going to introduce you to stock to flow. Right? So you only know what that is because of me. Yeah. That's it. Fair enough. Listen, if you've been rocking with me for a while, listen, I teach on this all the time. If you don't know what the Bitcoin block reward halving is, you don't understand anything about Bitcoin, right? I'll just be real with you. If you don't understand this, you don't understand anything about Bitcoin in terms of fundamentals or its ability, right, to remain what we call perma-bullish, right? So I'm going to just walk you guys through this real quick. We're not going to take too much time on here. I'm going to drop some real quick gems. You might want to rewatch this, right? What is the halving event, right? Basically, the way new Bitcoin is created, right? We know the Federal Reserve comes in, and we know that they print money and they do all that fun stuff, and that's how we get U.S. dollars into the economy, right? Bitcoin gets created by the lovely people that verify your transactions, the miners. They get rewarded for that work, and they get rewarded every time there's a new block, right? So every time there's a new block and they put all those fancy transactions that you guys send in there, the first transaction that they actually put in there is them paying themselves the reward for actually doing this, right? So let's just in the chat real quick. Yeah, stock to flow is, yeah, so yeah, this stuff goes crazy, right? Stock to flow is king, right? So these miners get paid a specific amount of Bitcoin on average every 10 minutes for, again, securing the network, confirming transactions, and right now that reward is 6.25 coins, right? So that means every 10 minutes on average, 6.25 Bitcoins are created in the market, right? Created, brand new, and those are paid out to miners. Now, every 4 years, or every, 210,000 blocks, I think 210,000 blocks is the actual number, about every 4 years, this reward gets cut in half, right? So you can see it goes from 6.25, that's what it is right now, it's going to get cut down to 3.125, right? And listen, I don't know if you guys really understand supply and demand, but I'm going to put you on to something real quick, all right? If demand, right, let's just say every day, right, every day there's a certain amount of people that are buying Bitcoin, right? Let's look real quick. There used to be a stat on this. There might not be now. It's so annoying. All right, well, listen, every single day there's a certain amount of people buying Bitcoin, right, in total, right? There's what we call a consistent demand, right? Just like every day there's a certain amount of people that are out there buying oil, right? Oil has a consistent demand, right? But with oil, right, the supply of oil is dependent on a lot of things, from things like the weather to things like governments to wars to trade policies, to just the companies and the institutions that control that, like OPEC, right? It's up to them. Sometimes they just say, hey, you know what? The price of oil, is too high. So let's just go out there. We'll get a bunch more oil. We'll just flood the market with more supply. We'll drop the price. Or if they want the price to go up, they could just stop drilling. They could just stop producing it, right? They could just make it more scarce, and that'll drive the price up because there's more people competing for less oil, or the same amount of people competing for what is a higher supply of oil. And that drastically affects the price, and they can control that. In Bitcoin, you cannot control this, right? The reward for a block is 6.25. It doesn't matter. The miner could say, "Oh, give me 100 Bitcoin for doing this." The network is not going to accept that. They're going to see that it's wrong, and the network's going to immediately reject it. So when this gets cut in half, right? When this gets cut in half, and you have consistent demand, right? And then you take half of that supply away, right? What do you guys think is going to happen, right? What is going to happen if you have consistent demand, but you take away half of the new supply, right? What do you guys think happens, right? Just basic supply and demand, right? You have consistent demand, cutting supply in half, right? Oil's a bit hard for you to trade. That's okay. That's fine. That's no problem, right? But if we have consistent demand, right? Say there's people buying 100,000 Bitcoin every day, and we're creating 100,000 every day. But now people are trying to buy 100,000, but there's only 50,000. But there's still people trying to buy that 100,000, right? Price goes boom. Somebody says short squeeze, basic supply and demand. Listen, what happens, and I'll be real with you, price going up is what happens, but what actually happens is those same people that were buying it the day before the halving now have to compete with each other, right, for that less supply. They have to start to outbid each other, which is the result of price going up, right? So when this happens, this is a drastic change in supply and demand. This happens every 4 years, right? So when you get close to this event happening, is the best time to buy Bitcoin. And in order to monitor that, you can use something called the stock to flow chart. And if you come onto this website called lookintobitcoin.com, you go under charts and we go to the stock to flow model. All this chart, this is the only chart you need. You never, I swear, I promise you, you never have to do any technical analysis on Bitcoin from an investing standpoint with this model, right? What this model does, it's a heat map. So this model shows you, one, the price structure, right? So we could see price structure, we could see the double top that we had, we could see the run in 2017. But the color of the graph, right, of the line chart, the candles, whatever you want to call them, is based off how many days we are away from this event, which we can see is 711 days away, right? Just about a year, almost really even 2 years away, right? We're looking at literally 2 years away. May 3rd of 2024 is the estimated date. That might get pushed back a day or two, depending on how effective the network is and how many miners there are and so forth. But we're about 2 years away from this event. And if you just look at this cycle, right, you can see as it's red is when we're furthest away from the halving. That means it just happened. When we get into purple, that means the halving is about to happen, and then blue is approaching it and so forth, right? Very self-explanatory. Let's just now look at this chart, right? Let's just look at everywhere it's purple, right? Look, it's purple here, trading at $11 back in 2012. What happened immediately after that supply and demand metric change? Price skyrocketed, right? All the way up to $1,200. $12 to $1,200. That's all one cycle. All one cycle, right? I mean, that's when it changed, and then that's the high of that cycle. Right, again, look, the halving happens in the purple. What happens? This is back, look, this is back when I bought it. This is back in 2016. I got in, couldn't be at a better time in 2016. It was like April or May. It was around my birthday. My birthday's in April. It was around 2016. All right, again, massive price increase. Again, look, purple, peak COVID, around March. Doesn't matter. The halving happened in May. Pushes higher. Right, now you can see the reaction here. It didn't trend as long. The cycles are getting a little bit more dragged out. But if you just follow the stock to flow model of buying as you approach the halving, right, you will, listen, I can't guarantee anything. But what I can guarantee, the only thing I can guarantee you is that the reward will drop from 6.25 to 3.125. And all I know about supply and demand, again, I can't guarantee you anything, but if demand stays the same and you cut supply in half, those people that are consistently buying have to outbid each other. And what's going to happen is that demand starts to overtake the supply because it's being forced into that position by code. Prices start to go up. And then certain things happen, right? Investors start to get happy. People start to have fear of missing out, right? Starts to break some price levels, starts to get excited, right? Gets into the red, into the orange, into the yellow. And then you can start seeing at some point it becomes clear that you shouldn't be buying it anymore, right? Look what happens every time it starts to turn green. Every time it starts to turn green, it falls. It's right in front of your face. Look, it's happening in front of your face right now, right? This cycle is all you need. You don't need anything else, guys. I'm telling you, you don't need your favorite YouTuber. You don't need me. You just need to understand this, right? So if this makes sense to you and you're never going to listen to anybody else again, then drop some sevens in the chat for me. Right, let me know that this kind of sank into your heads. Buy when this is blue and purple, right? Do nothing when it's orange and yellow. And maybe start to sell some when it begins to get green. It's that simple. You follow that time and time again, every 4 years, until it doesn't work. I'm riding this until it doesn't work. I promise you, I will ride this until it doesn't work. I will swear by this. This is what I understood in 2016. All right. First off, I bought Bitcoin before I understood this. And then I started doing research as it got to like 1K, 2K. And I learned this, and you got to understand, back in 2016, the environment was different. There were no banks and institutions involved in this. There were no giant public companies buying it up, right? There was no ETFs. There were no, you couldn't trade it on TD Ameritrade and all those other places, right? It was much different. You had like Coinbase, you had a few other exchanges, and that was it. It wasn't as big. You had banks back then basically saying that it was a scam, this and that, and I kept saying they don't understand the halving. They don't understand the halving. If you went to a bank, if they put on the news tomorrow that they're going to produce half the amount of oil that they're producing right now and it's going to stay like that forever, the price of oil would fucking shoot, and excuse my language, would shoot to $300, $400 because it would throw the market into a whirlwind. And that's exactly what this event does. It's the world's greatest fundamental event. I'm very passionate about this. You'll probably hear it in my voice. I love this event. I will ride this till I die. I'm telling you, I own Bitcoin that I will hold past my death. It will be passed on to future generations because this is the world's greatest fundamental events, and it is hard-coded into the network. Now, technically that can't change. Technically it can. Technically, if the entire Bitcoin community were to come together and agree that it needs to be changed, it technically could be. That is like 99% not going to happen, at least based off what we know about the community right now. But again, it's not up to the Federal Reserve. It's not up to it's not up to 8 guys in a boardroom, right? Like let's be real. Your entire financial system is put together by an elite group of 20, 30, 40 people that get to make those decisions, right? If the entire Bitcoin community, which is all the miners in all sorts of different countries from all sorts of different walks of life, if they all decided to make a change, then a change could be made. It's what you call true democracy, even though there's some arguments on that. But hopefully that made sense. I do see a lot of sevens in the chat. Let's see. Speaking macro real quick, no depression on the horizon. A depression is on the horizon. Like again, like this week we're about to be officially put into a recession. Again, like I said, in my opinion, we've been in this recession for 6 months to a year now. It's just now everybody's starting to realize it. It's always that way. You're always kind of ahead of the game when you play on rumors. You see the lining on the wall. So depression is it's in sights. Again, I think we're already kind of nearly approaching that, but you're not going to hear about that on the news for a few more cycles. Do I watch the stocks of the major mining companies? I do not. I do not. I'll be real with you. Stuff like that stuff to me is like what people will do when they don't want to, when they want exposure to Bitcoin, but they don't want exposure to Bitcoin. It's like buying an ETF. It's like I don't understand any of the other products that they build around like Bitcoin. Like going and buying like GBTC or like any of the grayscale trusts. That makes no sense to me. Like I would rather have ownership of the actual asset before there's not enough left for me to buy. Once Bitcoin becomes so scarce that like Coinbase can't just sell me, $5,000, $10,000 of it, then yeah, okay, cool. Maybe I'll go buy GPTC because I need another way to get exposure to it. Right now, I think that's the dumbest thing you can do. All that stuff is built for old money. It's all built for old money that refuses to sign up to Coinbase, money that refuses to sign up to FTX. They refuse to go to crypto.com. They just want to allocate it from their 401k. They want to sell some of their other stock and get exposure to it. That's what that stuff is for. If you're not that person, I would personally sit aside from it. Did I get screwed with any of the Terra protocols? I did not. I did not own Terra. I did not own Luna. I mean, technically, I got market effect screwed in the sense that that whole thing happened. So other things got dragged down. Bitcoin got dragged down, but I was already expecting that to fall anyway. Like it's just one of many things that contributed to my analysis. But I did not get caught up in that. I'm also not partaking in that. You guys can do as you see fit. I'm gonna just give you the warning though. there's no easy way out for them. The people that are buying that it's gonna go back to $1. If it goes back to $50, I'm gonna have $50,000. I only put $20 in. Like, first off, how dumb does that sound? I put $20 in, I'm gonna get 50,000. Right? There's very few opportunities where that is a reality. And when those opportunities do exist, they're not broadcast, so it's all over Twitter. Like when everywhere you go, people are saying they're doing that, it's a terrible idea. The only way they're going to recover is by burning their supply, which inherently means that they're going to have to migrate to a new chain. They're going to have to fork. They're going to have to issue a new coin. If you hold 10 million Luna, you'll exchange your 10 million Luna in exchange for like 1,000 Luna, so they'll readjust the supply. Trust me, you might come up a little bit off of it. You might be able to day trade it because it is very volatile, but stay away from it. Price will surge. Good luck. Good luck to you. Good luck to you. That's not the game I play. That's dumb money investing. That's dumb money investing. I don't partake in that. I've built nearly a 7-figure crypto portfolio without having to do that. I've built a project. I built my portfolio by buying solid projects, putting in the work, spending hours on Zoom with people like Abel, looking into projects, reading white papers, doing the work at the appropriate time in the market when stock to flow calls for that type of analysis. And you guys are buying Luna at like literally the worst time in history to be buying any project ever, right? Look at when it's this color green. Historically, everything falls 50% from here. You're buying stuff at historically the absolute worst time in Bitcoin cycle to be buying something. So, stay woke, family. Might as well go to the casino if yeah, exactly. Go to the roulette table. Go put your $20 on red or black or like the number 7 or something. But listen, family, I'll take questions for the next 2 minutes. I'll let you guys throw questions. I'll answer the final questions for the next 2 minutes, and then we'll kind of wrap this up here. We've been on for a while. I can get into so many rants and tangents whenever I come live. But definitely appreciate everybody. Like I said, I'll give you guys another minute or so to ask some questions while I sip my water. You had it since $10. Yeah, see, that's rough. That's rough. I've had people asking me since 35, like, oh, should I buy this dip? And it's just, I mean, listen, it's a tax write-off. Just write off the capital loss. That's all it is. Just, it is what it is. I wouldn't hold it. I wouldn't hold it. Unless you meant $10, like, pre-bull run $10, in which case that's even more unfortunate because you saw a plus 10x return on your investment and you didn't take any. And you could have been saved on that by stock to flow. You could have seen that the entire market was leaning into a point where historically everything falls, and you could have saved yourself. So hopefully you guys can do that now. Pre-bull run, yeah, okay. That's I kind of got the gist. That's what you meant. Yeah, it's rough, man. It's tough. You're not the only one. I know. I have a lot of friends on Facebook, a lot of friends on Instagram. Same exact thing. They got caught in it. You know, it is what it is. It looked good. I mean, it was very Ponzi-ish. I can't lie, but there's a lot of protocols that are very Ponzi-ish. It's what you get in a bull run. This is a great market outlook. Thank you, brother. No, thank you. Thank you to everybody that hopped on here. Thank you to everybody that liked the video. If you guys can still throw a like, that would be greatly appreciated. Always love that. Actually, let me see if I can. Let's see if we could throw this up there. Yeah. See, I had these little cool things to use, haven't used it all night. So make sure you guys like, hit that subscribe button, turn on the bell. You guys will be notified when we do more streams. That being said, family, I'm going to tune out. See you guys in the next